Hey everyone, we're gonna go through. Everybody's been asking for a video on how I trade meta. So we are gonna do a quick video on that. Hopefully this one works out. I've been trying this for a while now, so I'm not the most tech savvy when it comes to recording stuff. I did do this one on TOS. I know a lot of users use TOS. I particularly do not for options trading anyway. So I had pre-charted the levels just so we could kind of get an idea here. So just to give you a quick rundown before we get going. So you've got, as far as your indicators go, so the green, that's the 200 EMA, red is VWAP, blue is a 20 EMA, and the orange is the 9 EMA. Main screen here is the 2 minute, below is the 5 minute, to the left is 10 minute. Again, I do not use TOS, I do use Webull, but I wanted to try something a little bit different on this one. So but I felt it was important for everybody to understand how imperative it is for me anyway as a trader to have multiple time frames up on the screen just for confluence and things of that nature. So generally what I would do is I would chart out my intraday. Um, Again, most people know with Meta, for me anyway, that all of my zones are done a long time ago. Very rarely do I add new ones. I mean, every now and again I do, but sorry guys, as you can see, I'm not the greatest when it comes to TOS. So, but as a whole, my levels are drawn a long time ago, and then I just kind of roll with it. If something's not on there, or there's a reversal in an area that I didn't have marked, odds are it's something that I had missed marking from before. So I just charted out some quick levels that I had already had on Webull. Obviously, I can already tell that I'm missing something here. Um, but as a whole, again, these are already recharged, or these levels have been on there for probably months at this point, on my Webull side, not here on TOS. But so ideally, how my day would start is I'd come into pre-market, and I'd be marking, you know, specific levels outside of the zones that I already had. Previous day highs and lows, pre-market high, pre-market low are the four that I always do. So what I will actually do, we're going to go off of this past Friday's trading day, just to give you a rough idea. Again, this doesn't need to be super long or anything like that. So I'm going to go in real quick. I'm going to mark pre-market high and pre-market low. I'm not so concerned about yesterday high because this was the big fall down following the Snap earnings, where everything just tanked, and I knew it wasn't going to be getting back up there. Or, I mean, could it? Sure. Did I think it was going to happen? No, so I'm not worried about marking it. Maybe you could have marked or previous day low, which obviously would have been actually at the top of this zone here. So because I have that zone there, again, it's something that I'm not going to mark, but normally I would mark previous day highs and lows and things of that nature. So I am going to mark. I try to do these off the 5 minute. Sometimes I'll go as um, as low as the 2 minute, and for the pre-market highs and pre-market lows, just so I can be as precise as possible. So pre-market low in this case, I'm actually going to mark right here. And again, these are, I won't say pre-market high and pre-market low aren't significant levels to watch, because obviously they are. But I want everybody to understand that the major aspect of this for me is just knowing that those levels are there somewhere. So my pre-market lows are always a red dotted line. My pre-market highs are always a white dotted line. Now in this case, pre-market high again is the top of this zone, so I'm not going to worry about it. I'm going to leave it alone. So I've got my pre-market low marked. Again, I'm not worried about yesterday, high of day and low of day and all that stuff, just because I don't think it's going to get there, and obviously it didn't. But this is all in hindsight at this point. But so we're going to go back to the main part, and I'm going to give you again just a quick rundown of what I would see coming in. So I'm watching this pre-market area. I'm watching to see what it's doing in pre-market. So I use the 2 minute to base my entries. The 5 minute is my main trading time frame, and then the 10 minute is my just correlation of everything. Below here, you do have SPY. Sometimes I'll have SPY there. Sometimes I'll have QQQ there. Sometimes I'll have VIX there. Um, so I wanted to give just a, you can see the sentiment of the market obviously from there. Now, where that can be beneficial is depending on the ticker you're trading. This was actually one of those rare days where, as you can see, Meta actually followed. If you compare the 10-minute up top here to the 10-minute for SPY, Meta for the most part followed SPY today. Some of these higher spikes like you see on SPY here did not happen on Meta. Now, to be fair, for the last month or so, Meta's traded its own way. It's kind of done what it's wanted to do. There's been many cases when Qs and SPY are tanking, and Meta's just saying, "Yeah, piss off," and it's going its own way. You guys have seen me talk about that in the chat and things like that. So I don't use this more so for, hey, this is going up, that means Meta is going to go up. I use this just more for just to be able to watch market sentiment, and that's really it. So so again, back to pre-market. So I'm watching the pre-market moves. So here's what I'm seeing initially. So this is Eastern time, so 7:30 Eastern time. You can see there's just sporadic movement, right? It's pre-market, the volume's just not there. So around 7:30, it makes its curl up and it goes up into this supply zone. Makes it to the top of the supply zone, rejects, and it also rejects the 2-minute 200. So that's the first thing I'm going to pay attention to. And you can see it kind of, you get the crazy wicks. So this is probably 8 o'clock wick, I'm guessing. Yep. So this is your 8 o'clock time frame. So again, it's peaking up into that supply and it's rejecting the supply and the 2-minute 200. And now that doesn't necessarily mean that it's going to continue to do that throughout the day. However, the likelihood is going to be, okay, if it's rejecting the 200 in that supply, if you ever get to an aspect where the 5-minute or the 10-minute is directly above it, well, now you're going to have a lot of correlation to, okay, this thing's going to reject up there. Unless there's some crazy market news that just sends the whole market skyrocketing upward, this is going to be a high level rejection point. And then you're also going to take into consideration, psych levels, things like that. So just looking at the supply. So this is basically 175 to 176 if you wanted to round up. 175 is a pretty big psych level. Doesn't mean it's not going to get in there, but it's going to be probably be a heavy pushback level. For me, I've got a really good grasp on the levels that get rejected a lot more. You guys have seen me make those call outs in the past where I'll say this is a really heavy supply area, and that usually means, again, unless it's got some significant strength, it's not getting through it. It may do a quick wick through and come back down within a 10 or 15-minute time frame, but realistically, it's not going to get through. So that also helps me with correlation of being able to hold things a little bit longer and just kind of get through everything as a whole. So as I'm watching pre-market, I'm seeing it come down, and now you've got a 920 cross on the 2. And if I'm looking down on the 5, again, you've got a 920 cross, and we're under VWAP, right? So all significant levels. So it's doing what it's supposed to here. It's riding the 2-minute 9 down, riding the 5-minute 9 down, and even more so, riding the 10-minute 9 down. So pretty obvious what's happening here. So what I'm generally looking for with Meta, again, is everybody knows for me, I'm a zone guy. I am a big time zone to zone trader. I'm looking for good R&R entries. And essentially what I'm doing with these zones, so I move this down just so you can kind of see I have this next zone up, right? So I've already got an idea that it's been rejecting this. So even as the 200 is rolling down and getting closer and closer, I'm okay with that. What I'm going to be looking for now is where's the 5-minute? So the 5-minute 200 is just above it. So I've got the 2-minute 200 now at this point coming into the open, as you can see. I've got the 2-minute 200 that's at the bottom of the demand zone or the supply zone. I've got the 5-minute 200 that's creeping in above it. And then when I look at the 10, I see the 10 above it. So although it's not the greatest aspect for entries, I could technically start and as you can see here, it does, but my process coming in is, okay, I've got 4 levels of severe rejection possibilities up above here, between the 2-minute 200, the 5-minute 200, the 10-minute 200, and the supply zone. You can even add number 5 in there if you want, with it being $175 as a severe psych level. Usually what I'll do with levels like that is I'll up it to like 175.50 as a mental thought. hey, I'd like to see it wick up in that area. And in this case, it got to 30 cents here and then, 62 cents there. So, um, not a bad thought process. But again, my thought process as a whole is I've got the supply area here that it's already rejecting multiple times throughout pre-market with heavy wicks, as you can see. Um, then the other points of rejection are the 2 minute, the 5 minute, and the 10 minute 200. You guys have seen me post a million times. The 10 minute 200 is usually undefeated on the first attempt or two. It'll usually shut it back down. If it's underneath, it'll usually bounce from it. So again, something that I've always figured, or something that I've figured out over time, trading strictly the one ticker and learning its tendencies, learning everything about it. Um, so as we come into pre-market, what I'm looking for is, on a dump like this, I'm hoping to God that it's going to give me one more little shove down into this demand area. For me, I'm an open bell call player. If it hits that demand, knowing that I've got the rejection above, so that's roughly a $3 to $4 move from zone to zone. That's hella good R&R for me. I'm taking calls here, um, just because again, it's getting the push down that it wants. Now, could that go against me? It absolutely could. If I get a candle, if I was to enter here and scale in here for calls, if it breaks this bottomless supply, which subsequently is another key psych level, right? 170, 150. If I get a candle close on a 5 minute below this, I'm out. That's when I'll scale myself, or I won't. I'll mark it out and take the L, and then I would actually be looking for an additional bounce down here to go up. But again, the R&R is good there. And you'd have to have more than just that thought process going in, right? So if I was to quickly scroll back to yesterday, so yesterday was that big tank down, and then it shot up out of this. So right, so the candle, the 10 minute candle close didn't close there. Where'd the 5 minute go? Same with the 5 minute, the 2 minutes. So you knew this, and there's your answer right here. So you had the wick out of it, right? This is just volatility that causes that far of a wick down. And again, this is where you make your money. But this is still a safer entry. So you can see here it held that. And now, granted, this is after hours, so you weren't trading it, but so it held this. So I would have seen that coming into pre-market to know, okay, worst case scenario, if I'm entering calls here and I get stopped out, this is probably a better option. And I also know coming in that these two levels here, these two zones, were the zones that I always talk about that are extremely heavy, from the supply standpoint. So now it's going to try to use those as support. So these are two highly convoluted, or these are two high zones of impact to be able to find a reversal on, because now it's above it for support. But anyway, so back to what we're talking about. So we get pre-market move down, and in this case, it did hit here, um, and then you can see immediately popped out. Now, why I use the 2 minute, for me, the 1 minute, and for most newer traders, I would say this. I know Maple trades the 1 minute. Well, Maple's been doing this a really, really long time, and is the master of his craft, right? We're not. The 1 minute is a lot of noise. It just is. The 2 minute gives you a little bit more of a buffer, and you can kind of see what's going on through the other time frames at the same time. So in this particular case, I was waiting for this, and I did take this trade. Um, Now with the bell calls, I try to scale in, but sometimes you just can't because of how quick it goes. Now here's what I did see. So the first 2 minute candle comes down and it bases the top of the supply, or of this demand zone, right? So if I zoom in a little bit more so you can see it right there. It's right on the top. And then I get a wick down, I'm in. Um, in this case, I didn't scale in, I just slapped it. Once I seen it kind of, usually I'll start to scale in on a quarter of the entry, or a quarter of the zone. So I'll scale in there, and then again at the bottom to get the best average. But in a lot of cases, it doesn't work that way at the bell because it doesn't fill the whole zone. You don't get full position. And I know Maple talks a lot about scalping. I don't scalp the open. I snipe the open. So I try to get as much of a position as I can for a quick move up, mainly because the IV is usually spiking pretty good, right? So from here to here, that's a big move in a 4 minute candle. So you get 2 minute and 2 minute, right? The other thing to keep in mind and be mindful of is, so you can see you get the wick down, you get the pop up, and then you get the base on the pre-market low. So this is again another reason why I mark that level. And this is also another reason why I was okay getting into this trade for the most part without really even thinking about it. Again, nice demand level down here, demand zone. And so what I was actually expecting was I was expecting a quick shot down and a wick and nothing to close below that pre-market low because you had demand below it. So I was expecting it to kind of wick down and then pop up. The only downside of this one is the pre-market low happened right before the bell. So it's going to be hard to mark. So you gotta kind of watch it with your eye and see what's going. So then you see the shoot up. I'm not worried about the 920 and all that stuff in that first, really be honest with you, in that first 3 to 5 minutes. Um, this was a pretty big move up into it. So you can see here immediately rejects the 2 minute 20 and the supply zone. So I'm looking for zone to zone moves all the time. So in this particular case, again, at the opening bell, I'm not necessarily scaling out. As it starts to push, I'm looking for a pre-market high test. And again, in this case, pre-market high is the top of this zone. Therefore, at the end of the day, I'm looking for this zone to zone move. Now, here's what I will normally do. Off a bell play, I'll scale in here. I'll scale out full here. I won't scale. I'll just sell it. Full position. So full position in, full position out. Um, with the Now here's what I'm looking for again. I'm looking for the rejection of that 2 minute 20. I'm looking for the rejection of this zone, and I'm also looking for a rejection of that pre-market high. So obviously it comes back down. Now you could have entered again here off of VWAP and the 20 and took it back up for a second pre-market high test. I didn't, um, but you could. But again, as you guys know, my main plays with all of this are the 200 EMAs. Um, but you could have easily done that. So for me, literally, my day was done on this play. You guys, a lot of you saw my tweets and you saw my post within the Discord of my day was done in 20 minutes. Well, you can see it was actually done in about 8 minutes. Um, then it came down, rejected again here. I'm sorry, rejected a 2 minute, rejected pre-market high, rejected this supply zone. Again, all easy levels to see. You have that many points of resistance stacked against you. you it's a good indicator of where you can be, right? And again, it's not always going to win, but the R&R is there for it. The probability is there for it, so on and so forth. So again, I was referring to the reasoning why it's important to have multiple time frames visible. So, I mean, yeah, you can see 2 minute wicks till you're blue in the face, but seeing it on a 5 minute or even on a 10 minute is a completely different setup. So this can scare a lot of people because you see this big long lower wick on the 10 minute. Um, what it's doing there is you've got support just trying to hold all the way through. Um, but again, you've got so much resistance up here, it's going to take a lot of strength to get through there. And it tried, but ultimately it fails. And then it fails right back down to the zone. Now, I would tell you under normal circumstances, so I see a push through and a failure of pre-market low, but then I see the rounding bottom on the two. Um, I see it here. This for me would be a good R&R for a second entry for a quick scalp. So in other words, I'd be looking for around maybe go up for a retest of pre-market low. Um, this is kind of a situation where if the R&R is there, which for me on a Friday it is, on another day it wouldn't be. Um, on a Friday because contracts are cheaper, I can position it heavier. The heavier I go, the smaller of a move I'm looking for. Because again, I'm looking to take what the market's willing to give me, right? So this is coming to the bottom of the zone, and you can see it fairly wicking pretty good at the bottom on the way down. Now the 5 minutes not going to show you that. You see it here, but you don't see it so much here. You see a pretty strong flush down, and then you see a little bit of a pullback up. So this is where the 2 minute comes into play for me and me understanding how to read meta. Um, for a Friday, this was a quick scalp. I did take it, and I was hoping for VWAP. I scaled out half of my position at pre-market low retest. I was actually out on this wick, on this 5 minute wick here. When I saw that it was about to tap VWAP in the 20, I was out the rest of my position there, and my day was done. So if you look down, you can see, so it was 10:15. Um, so I was a little bit off on what I was saying I was on, but I took that little scalp and said, okay, that's it, I'm good. Um, then from there, like any other ticker, it's following down. It's just, you could have rolled this all day long just following the EMAs. What I do want to do is go back to a day earlier last week where things weren't so volatile after this big drop down, just so you can get more of an idea of what I'm looking at and things of that nature. So this is actually not a bad one. So what day is this? This is the 20th. So let me get my time frames in order here. So there's the 20th. Move the 10 minutes so you can kind of, again, keep it all in line here. Okay, so now on this day coming into pre-market, everything's kind of, for the most part, it's sideways. But as you can see toward the opening bell, it's starting to move up. You do have the 920 cross on the 2, so that's a good sign. So right around 9 o'clock, that 920 crosses. You can see it here as well. It crosses on the 5 at right around the same time frame. Um, so again, I'm looking for, where's my best entry, where is my best support, and where's the best R&R. Um, this was a trade that I did lose on initially because I was expecting a push down. And that's a prime example of having a bias going into the day. Not normally my style, but it happens from time to time. So here's what I saw coming into pre-market. I saw choppiness and I saw movement up from the 9 o'clock time frame on. I see the 5 minute 200 below. I see the 2 minute 200 below, and I see the 10 minute 200 way below. So for me, again, because of my rules and my trading style, I am not entering a trade unless it's in my zone outside of a 5 minute or outside of a 200 EMA tap on a certain time frame that I was looking for that day. So in this case, I'm not taking this opening bell trade because I don't like where it's at. I don't like that it's sitting in the middle. I need to see what it's going to do in this supply zone up here. I will tell you, here's how I lost on this particular trade. So because it was underneath, I was expecting a rejection here. I did get the rejection. I took puts here. Okay. So again, once I take puts there, after the first 5 minutes of the opening bell, I'm going to my 5 minute time frame. I see heavy wicks. I see wicks. I still see heavy wicks, but I also see it supporting VWAP. I held. I had this little pop up. So it broke my zone, right? Broke my zone. Closed outside of my zone, so I got wicked out. It broke new high day. I got wicked out. I did not get a chance to re-enter it before the move down. So again, it came up here before the move down. Um, and this is all speaking in hindsight, um, from the standpoint of this is what I would have done. I did not trade on Thursday, so just be mindful of that. But so, and I don't even know if these zones are absolutely as accurate as my Weeble ones are. But just telling you what I would have done, I would not have taken this trade based off of what I see here on this chart, because again, I'm in the middle. It's not following any of my rules, so I would have taken the trade here, taken puts. I would not have scaled out down here. That's not a big enough move for me. I would have scaled out down here, or again, if it came all the way down to the 2 minute, but preferably. So what I liked about this chart and why I'm explaining this aspect of it, this 2 minute 200 would not have mattered to me if I was in puts because this 5 minute 200 is sitting in a demand zone. So to me, the likelihood of it coming down here and this being more supportive is strong. Um, to be fair, I didn't see the trend line that I normally would have marked. There's a clear trend line that you can see from the bottom of this green candle. If you run it straight, you can go to the bottom of this green candle, and I know it doesn't touch wicks, and I do my trend lines different, but there's a clear upward trend line here that actually ends up getting touched again right here, that far up. So you can play around with that if you like. But so as a whole, again, what I would have done is I would have taken puts here. It wouldn't have come to my fill to sell off, and it would have ended up going against me because it's going my zone here. So I would have been stopped out on this candle because it closed above my zone. And then the move comes back down, bounces the 2-minute 200, and it never comes back. Rest of the day is an uphill slope. So, and this is what's important about this particular day for you guys to see, again, my mindset and how I do this. So it bounced that 2-minute 20. It goes through, breaks through supply here. Right, still a lower high. Comes in. Now you can see what the 920 is doing. 920 crosses here on this candle, comes back to test it, and then takes off. Then from there, you can start lining up your pivot points and things like that. But literally, you could have ridden the 2-minute 9, or if you look down here, the 5-minute 9, all day long. So for those that ask me, how do you stay in these trades so long? You just saw it. So you can see here, these 2 wicks was the best entry of the day. And again, on a higher time frame, it can be very deceiving, right? Because what do you see? You see lower lows. You see lower lows on a higher time frame. So that's your first telltale sign to get out. You can see it here in the 10-minute. But where you also have to pay attention, and this is where I've gotten much, much, much better with my trading, and why I've gotten so much better with, we all talk about getting wicked out. Well, here, again, so how I do it is, this wick can come down here, and I'm going to endure a little bit of pain. Or in this case, I would have been in puts, but let's say I was in calls. I'm going to endure some pain. But neither one of these candles closed below the 5-minute 20. I wait for the 5-minute candle close. Yes, that means that sometimes I'm going to be a little bit more red on the trade than others, but I'm waiting for a 5-minute close before I exit, which is why in this case, this candle closed above my line on the 5-minute. That's why I was out. And of course, I could have, if I had been willing to wait a little bit longer, I would have seen the tweezer and the immediate shot down. But again, I'm following my rules. Once that closes, that closes. So that's kind of the bigger aspect of it for me. Um, but again, never close over under the 5-minute 20. Goes up from there. Um, so that's just kind of a basis, and then you can see it's absolutely a zone-to-zone trade, and then the rest of the way, all the way through. This is a stair stepper all day. Um, so it's kind of clear. Now, the other aspect of this, and this is something that I've been talking about now for a few weeks, and this will likely change, but it's been working, so it's something to be mindful of. What I've noticed with Meta in particular is somewhere between, realistically, it's been the 1020 to 1030 candle, which in this case would have been like this red candle here. Obviously, this is the best entries of the move, but there's your confirmation where you could have entered here, and this was 1015, or your first green candle at 1020 in the basing of VWAP and the 5-minute 9 that really starts the continuation of the move up. So that's been happening every day for the last, I believe, we're up to 12 or 13 days now. So something to look at, something to be mindful of. But again, this is all just kind of the importance of understanding whatever particular ticker it is that you're looking at. Um, and I know this isn't the greatest video, guys, but again, I'm trying to get some more content out there for you guys to give you some insight into my brain. And this is a video that's been asked for. So I wanted to do it a little bit different with TOS, like I said. But ultimately, you guys can see the basis of R&R, the basis of my rules, and how I flow with that. Now, one additional thing I do want to add to this particular day with Meta. So again, as I referred to, I couldn't do anything off the bell here, so now I've got to wait for a setup. Now, as this is coming back, what I have entered here, I would not have. I would not have planned to enter here off the 2-minute 20 because this is still a supply zone, and now it's broken under it, right? So would I have actually entered here? No. Um, Now again, had it come back and entered off of the 5 minute 200 down here, if this had fallen down, I would have entered here absolutely. Um, the R&R is there. I would not have entered here. I would have actually waited. I would have expected a rejection off of VWAP here, in supply again, and then down. So again, to give you a thought process of what I'm looking for. Not to say that you couldn't have taken this trade. Obviously, you could have. And you have every indication that it was okay. You've got lower wicks here, lower wicks here, holding that 200. You've got a bigger time frame on the 5 minute and 10 minute, both with heavy lower wicks. So all the indicators were there where you could have absolutely taken this trade. Um, for me, though, it wouldn't have happened. I would not have taken that trade because the R&R isn't there. You still had you still have upper rejection possibilities beyond belief up in this area and in the supply. So what I would need realistically for me to get into this trade. So again, I use the 2 minute for my entries. So what I would have needed is, so the second I saw this pushback and I saw it come up and I saw it wick down here and hold VWAP in the 20s, this candle right here or this candle right here would have been my entries looking for a second leg. And then from there, I would have ridden the 5 minute 9 and the 2 minute 20 right to the same indicator. The rest of the way, I would have ran it through up to the next zone. So I would have entered in, like I said, right around here probably is more than likely where been my safe entry. You guys know I'm not exactly the safest. So being realistic, I probably would have been in here somewhere once I saw this initial candle base. Um, and I would have ridden it up from there. And the beauty of that actual play is, again, 2 minutes always up. And now, once I'm in a trade, I'm watching that 5 minute time frame. For me, at no point here was there ever any indication to sell. You could have said a little bit here in the chop, right? The chop might have hurt you. And again, it's an easy play. You could have said, okay, there's my top. So, and I know this is going to be perfect, but so there's my top. And let's say this wick. There's my bottom. So I'm looking for a break and base above or below to tell me to get in or stay in or get out, right? And you can see it comes down, hits the point. So there's my pivot point up, never closes below it on the 5, holds it higher, higher, and it goes. For me, this is Maple, and Maple talks about this obviously, and he gives you much better explanation than I ever will with this general channel. But for me, the chart never told me to sell. So I would have been in this to the zone. On the tap of the zone, I would have sold off a certain amount. I won't get into position sizes and all that stuff, but I would have sold off a certain amount, let the rest run. And the second this candle closed outside of my zone, I would have cut it. So I would have scaled out here at the entry of the zone. I would have cut here at the break of the zone. Either way, I'm still green on the trade. So good trade overall, but that way you have a better mindset of kind of what's going on there. I mean, that's really much it for this one, guys. For me, again, zone to zones, find your 20s or find your 200 EMAs. Look for the confluence and where the best R&R is. Is it support? Is it resistance? What other aspects are above it or below it? Look for those things. The more stacking you can get for support or the more stacking you can get for resistance gives you the better indication of where you can enter, how you can play it. Obviously, you still have to follow market sentiment and things like that. But ultimately, at the end of the day, learn your tickers like that, and it makes the plays that much easier. Um, Hopefully, this one works. I've recorded this video about 17 times now. This is the last time I'm doing it. I want to get it out to you guys. So, any questions, comments, or concerns, or stuff like that, feel free to comment in the chat or shoot me a DM. I hope this one was helpful, and we're going to have some more coming out pretty soon. Thanks, guys.